Hello and welcome back to our weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. So this past week, we saw the market up 2.71%, which brings us up year to date 9.92%. We saw a smooth ride up this whole week. Really leads us to some questions about what's going to happen next, what we've seen so far, and with the market reaching 4,128. We're already at some levels that a lot of analysts were saying we wouldn't reach until December, or would be the final number that we would reach for the entire year. So what does this mean for the market? Well, if we look at what we saw within this past week, so what we see is, again, a pretty steep rise this whole week. The first day of trading on Monday, we saw a sharp jump up. Now that has to do with really last Friday and the jobs report, which we talked about in last week, how we thought that the market was going to jump following that report. And that's exactly what we saw. Within the first day, we jumped up to a significant level, stayed there for most of the week. And then right towards the end of the week, we started rising again rapidly. As we've talked about many times before, rotation from technology into financials or cyclicals or defensive, into energy, out of energy. And it's been this back and forth, but overall the S&P 500 has been going up pretty steadily this whole year. But what's surprising is that the sectors that have been doing really well have been switching very rapidly. And the reason for that is it doesn't really come down to the retail investors, individuals who are investing, and it comes down to the institutions that are really moving this market in one way or the other, trying to be on the right side. And just two fundamental differences. There are some people who feel very strongly that going into value stocks and fundamentals are really, really important right now, and they're doubling down. That's the rotation away from tech. Then you have another group, actually the biggest hedge against inflation is to be in growth stocks. And if we think inflation is going to come back in a meaningful way, well, why would you ever be in fixed income or value that's paying dividends? Those dividends aren't going to be worth much. We need growth. So you have these two opposing forces, and it really feels like this yo-yo going back and forth between people running to value and people running to growth.
And that's not surprising because we had the great jobs report on Friday, which is very positive for growth. The more people who are working, the more people who are buying things. In addition, we do have an opening up of the economy more because 66 million people in America, which is about 20%, who are fully vaccinated. That's great. We have another 34 million who have had at least one vaccination. So we're looking at something on the order of 34% of the population who've already been vaccinated. That's a very good sign that people are starting to feel confident that the end of the pandemic is closer. And we're coming to spring and summer, which usually is very active for the industries that have been hit the hardest: entertainment, hospitality, restaurants. So all this is a very positive piece. I'm expecting to see some fairly good economic numbers when earnings reports come out.
Rich brings up an interesting point, and we've gone back and forth a little bit on this. I think the market is now less concerned with COVID. We know the trajectory from here. Companies are coming out in April with earnings from the first quarter, and the expectations are really, really high. It would not surprise me if we miss on earnings to see the market pull back sharply from our current levels. Even if we hit earnings with expectations, I think we could still see a pullback in the market. In fact, the only way that I think we stay at these levels is if we blow out earnings. Now, I actually believe that that is possible, specifically for some of the large cap tech and other areas. I think we might see a massive earnings for the first quarter, but I just don't know. And I do think that the market at its current levels extremely high. And if we do see any faltering in earnings from the first quarter, it wouldn't surprise me to see a swift sell-off and, again, a rotation either away from stocks or specifically away from growth in large tech.
Yeah, the two of us have a slight difference piece. I think that the everything that Knight has said, I actually agree, but the conclusion of it, I think, is going to show that earnings are higher. The one area that makes me concerned about is institutional investors especially are going to start to get concerned about interest rates. And to me, I think that's more likely to be where the downdraft for the market will be, not on the earnings front. But we'll only wait and see whether Knight's more correct or I am as to what's going to happen.
Those are the two biggest pain points for the market going forward. I don't think it's an either or. I think those are the two hurdles that the level has to get over. One is first quarter earnings. I think that's a hurdle that can be cleared. I'm not sure it's a given it will be cleared. The other is inflation, which ties in with interest rates, because if we see inflation start to take off, then there's going to be the expectation that the Fed is going to have to raise interest rates. So those are absolutely the two hurdles that are in front of the market at its current level. Will it clear one? Will it clear both? Possibly. We just don't know, but those are definitely the areas that we're looking forward. And for me personally, right now, I'm looking at Q1 earnings because that's the one that's going to be coming sooner. We know inflation is going to look really high year over year, but I'm not really expecting for worrisome inflation numbers until, late summer. If we're still having really high inflation late summer, then I think there's actually a reality that the Fed could start raising interest rates. But where we are right now, my mind, let's see if we can get over this first hurdle. And once we're there, then we can maybe start focusing more on the interest rate and inflation discussion. Fun fact of the week, anything that you've been looking at that you found interesting over this past week?
Well, it's sort of related to something I discussed last week, radioactive battery. This week, a different startup has come up and came out with that they're going to have a small nuclear reactor fusion base that will make energy by 2030, which is only 9 years away. That would solve a great deal of our energy problems that we have, as well as pollution. So it's very positive if it's true.
So what are the implications of that for the laymen out there who don't understand what fusion is?
Right. So fusion basically means they take small little atoms, push them together under very high pressure and heat to make a bigger atom. Usually it's some type of hydrogen that gets popped into to make helium. And we have, in order to do so, governments have been working on this since the 1940s and have yet to been successful. Matter of fact, there's an international consortium that the United States is part of that's building one in either France or Germany. And this is a private company that has raised many billions of dollars, and they're hoping to have one ready several years prior to large consortium. And theirs is going to be much smaller. Basically, it gets rid of all of the coal burning plants, natural gas burning plants, and would be an addition to solar and wind. And you wouldn't have to worry about if there's enough wind or if it's a cloudy day. It would just continue to produce energy. And the energy is very, very clean. There's no radioactive waste. So it's a very positive thing in the climate change. It would be actually a game changer.
Lot of energy clearly on your mind and trying to think of that for the future. Well, thank you for that. As always, we appreciate you guys listening to us, tuning in every week. And if you appreciate or like this video, give it a like, subscribe to our YouTube channel. Every Saturday, we're out with a new video recapping the market. And as always, we're here to support you. Your money's here to support you. And we'll see you again next week.